Middle East uncertainty adds to tricky trading conditions. Welcome to Market Insight, I'm Ramzan Karmali. Iran's attack on Israel has rekindled the allure of safe havens, and oil prices have also surged. But with no clarity yet on how the Middle East situation will evolve, what should investors do? Well, to help answer that and more, I'm joined by Janet Moy, Head of Market Analysis at RBC Brewin Dolphin. Janet, thanks so much for joining us. Well, let's start with oil. It's broken through the $75 a barrel mark. It rose 5% yesterday, and it's already up around 3% today. And there's reports now with oil production facilities in Iran that could be targeted as well. So surely that means there's a lot further to go.
I think there's certainly escalation in the conflict level in the Middle East. I think this is something to watch. And now it involves Iran, and it is an escalation. I mean, there has been direct attack before in April, but I think this is of another scale, and it could actually intensify. We're still waiting for the follow-up actions from Israel. But I think generally speaking, I think the production facilities could be at risk in Iran. And Iran, I mean, as an OPEC member, is the 9th biggest oil producer in the world, about 4% of global oil production. So if that is being hit, obviously that could have some supply implications. So I guess that would depend on the balance of demand versus supply. I think analysts remain concerned about demand outlook given the slowing economy. Even the Chinese stimulus measures that came a week ago, it didn't really stimulate that much the oil prices. And I think also the supply ex-OPEC would be in huge focus as well. So I guess we're still in a wait and see mode, but you're right. I think there could be upside risk to the oil prices.
Now, gold, government bonds and also the Swiss franc surged on Tuesday. Do you think we'll see more of these classic safe haven plays in the coming days?
Well, again, I think it depends on the situation. I think today that safe haven moves have unwinded a little bit, but I wouldn't be surprised if these safe haven moves, particularly I think in gold, number of factors driving gold in particular, that would likely remain favorable. Geopolitics is one, lower real interest rate is one, structural factors like central bank buying as well. I think for bond, it could be more related to the central bank outlook globally. But I do think that, it depends on how quickly the situation escalates. But I do think that these assets will have some support going forward.
Well, added to all of this uncertainty, we also have a US election coming up. This election is likely to have a bearing on that and ultimately the markets too. So what are you expecting the impact to be here?
I think the key risk for the US election is actually not being priced in yet, which is the one on trade protectionism. I think obviously in terms of the polling and the betting odds, I think Kamala Harris has a high chance of winning, but it's too difficult to call. So I don't think markets are priced in the Donald Trump victory scenario, which is lapping tariff all across the globe. So in terms of the geopolitics, I think either administration is likely to keep providing security assurances to Israel. So I guess that wouldn't really change too much. I do think that potentially Donald Trump coming in, it could insert a bit more volatility given how erratic and unpredictable he is. So again, I would say, market not exactly pricing in all these potential risks.
Well, one thing I noticed is that European shares are edging lower, but not in the same way as we saw Wall Street and Asian stocks falter overnight. So why do you think that is?
I think there are several factors. First of all, yesterday what we saw is the retreat in U.S. technology stocks. That is the main loser, and I think that has to do with maybe people taking some risk off the table given the high valuation there. I think basically yesterday what we saw is a risk off mode in Europe, right? So in the UK, you got the index supported by a very high share of energy sectors, which energy shares are up about 2.5% this morning. And I think for European shares, I think recently that has really been boosted by the Chinese stimulus measures, because a lot of the European discretionary sectors, they have been buoyant by that stimulus measures that directly target households in China, for example. So I guess it's just that European equities recently have some supportive momentum from China. The valuations are being better than that in the US. So I guess when you have a risk-off event, then the shares in the US with high valuation tend to take a bit bigger hit.
Janet Moy from RBC Brewin Dolphin, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.